Good morning. All right. All right. Okay. Where are we at here? All right. So things are playing out. They don't always do, but they're playing out according to the script we talked about at the end of last week, the beginning of this week, with the failed buy setup. And now we look for this measured move lower, which is already happening with this gap down. So we'll see where this goes. So the blue line there on SPX is, where I marked it was where SPY is now, right? Where it's gapping down to. So it's on some support. And this low here, which was the turn, right, that little corrective pattern there and started to move up. That low is about 443.70. And then down here at 440, there's a big open interest in put. So 445 and 440, pretty big open interest. And so what I would look for, so what we do is we look at SPY. And McGraw, if you're in here, it's interesting why it doesn't correlate in SPX to the same. The big open interest there, which is it's usually the reverse. Sometimes they match, but they're not. Anyway, so those two levels should be the reference points. We'll see where this goes. It's here. I guess it's about a 0.5% gap down. Last I looked, something like that. It is some support. And then looking lower, let's just expand this a bit. I have that on 24 hours. So around 445. So what I'm doing here is looking at this, since we don't get SPX data pre-market, right? And I'm looking at where this is at, where support is, where that open interest is, and what can we do with SPX? So SPY, as you can see, in the essence, looking to the left, it's in the middle of nowhere, which means let's wait for it to get somewhere, ideally. And so should this continue lower this morning, it's beginning to stabilize in this area here. You see 446, and at 445 is a bit lower. And there's this little bitty support here, and I'm looking at this unfilled gap. So some kind of a spike down here and a little stabilization, kind of like what's happening right now. Won't take much, but a little starting stabilization. Well, where we're going here. Relate that to where SPX would be. Give me a second here. Just eyeballing this. And I switched it back. Hold on. 45, 26. All right. So it's kind of in the middle of that red bar. So coming down into this area. All right. So we've got an exact level there. Doesn't have to hit it. All right. We look, it's an area. So S&P's, SPY moving down here, right, should get in, I would think, in a bounce. That's a pretty big move if it happens from yesterday's close. Even with the gap, if it's a gap and go down there, maybe there's a little stabilization initially, that it's stabilizing right now, as you can see, beginning to stabilize. So SPX, the middle of that bar, is at around 44.80. Let's just, 44.80 is the middle of that bar. Let's just throw this down here for now. All right, and let's look at where 40, let's see what premiums are at. Come on, data. What? We're getting back to no-brainers here. So it would be great if it goes down there. Right now, 4,400, right? Whole number 4,400 down here below the 50 MA is 60 by 70. And 43.95 is 50 by 65. So way down here, if things do drop at, from where they're at, when we looked at spiders, down to the level that we looked at right here, this premium, well, it depends on how fast it happens, will go up. And you can even get a little further away. But that would be the plan, right? To see the open. Do we get a continuation move lower? And then looking for a put spread down below at 4,400, give it, in there, you'll see whatever it is at the moment. A little more intermediate term. I mean, it's only Wednesday, it's early, but we're getting the beginning of the turn, meaning let's see, does it take out? Well, it should take out last week's low right at the open, right? Meaning, looking at my cursor there at around 44, 45.08-ish, give or take. It's going to gap below that. And 4,400 is pretty far away. Just looking at these charts, I don't think it would go down there today, but let's see. We just look at average ranges day to day. I mean, there's a monster day. Well, that's a weekly bar. But just looking at average ranges, well, it's a big bar on the upside. And just looking at, big bars, you can see whatever the range of that bar is there. Wouldn't put it at 4,400. So look, looking at what I said, these bars, average range, what I said, support, resistance, open interest, put spread below 4,400 should be a no-brainer. Okay. Wanting to let gap fill and then sell. Well, if Michael K and YouTube saying let the gap fill and then sell, I don't disagree with you, Mike, but you'll see if you get the gap fill, it'll be interesting to see how much it bounces at the open, because let's go back to SPY and being here, it wouldn't take that much to go up to fill the gap. I guess it wouldn't have to travel that far. So here's the overnight pivot on the way down, and the gap fill. Be up here. Considering the failed buy setup, I don't know that it'll get there. I don't know anything that's going to happen in the future other than what I see right now. And my speculation that since this is the start of the move in the gap, it may not, but if it does, I agree with you. It would be a good place to sell it short and then look for it to roll over. All right. Futures, and you can see they're, continuous, the pattern we talked about. Go back and listen to Monday. The deep retracement here, looking for it to trigger the buy setup. And it did. Covered all of this in the weekend video of the letters that this is what one of the scenarios to play out. Buy setup triggers, it fails, measured, move down. All right. So coming down into here would be an initial target, and then we'll see what happens. We'll see. Interest rates, maybe we'll see. There's a void here, right? So once it gets down into this area, that's where buyers should want to defend and step up again. This is where the bear sandwiches, right? That continuation pattern right there, that 3-bar reversal. So that's, you can see the cluster of bars, pretty significant area of support, and we'll see how that's handled, right? 200 MA. See if it gets there. So far, today's range is about the same as yesterday's range, and a little stabilization, pivot high, resistance. Look, the faster it goes down here, the better. It's the better. It's, just creates a void. It's better for a bounce. So we'll see. And you can see this is not extended to what would be a measured move yet to the downside, which, will correlate, just eyeballing this down around here. All right. So there's the plan for that. Qs, same story, breaking through the support already. Where's it going to go? Look to the left. It should get down there where the 20 is and the 50 kind of clustered together in that area of support. That would be a downside target. YM already down there. It's been, at one point it was a little stronger and then it got weaker. And you see the reversal, the failure. It's on support. We'll see how buyers want to defend it or not. You can see the same intraday pattern here that's happening pre-market. And this looks like it should go lower. And if that's going lower, not that they always have to be in lockstep with each other, but so far they've been pretty close. I think that's going down. What's McGraw telling me? 43.75, 43.50 SPX for Friday. They were bought yesterday. They are now triple. Do they close after OMC or bounce? SPX. Well, somebody's always buying something, McGraw. So, meaning I'm asking you a question when I say meaning is that the open interest increased significantly from one day to the next. That you're saying they were bought, and it would make sense that somebody was buying put options as things rolled to the downside yesterday. So they're always buying. Just based on looking at the data. They're always buying at 25 to 50 point increments in between the strikes. Yeah. So you're saying 43.75, looking for downside targets, 43.50 for Friday. Well, that's pretty bearish. So look, they were buying cheap options yesterday. And McGraw's pointing out to me the prices that they've tripled overnight. Nice trade, right? Yeah. Nice. So will they, cover this? They take some of that profit. Who could blame them? On the open, maybe that helps, bring the markets up a little bit at the open. So, we'll see how it plays out. Yeah, well, they roll to a strike. So look, you can triple your money overnight. Why not take some money off the table? Hold on to some and see what happens. This move is not over, in my opinion, to the downside. So, but with an expiration on Friday, with a target down there, and you get a bounce, that profit could evaporate pretty quick. You're saying that you roll or whatever, there's different strategies on how to handle that, or just put the money in your pocket. Anyway, let's see what the rest of what's going on here. Right. Moving down, right. Same everything else. This to me, unless some miracle happens, I think it's going back down to the bottom of the trading range. Bitcoin down quite a bit here, but it's getting close to the highs. So down at that pivot low there. It's not pivot low. That's a bottoming tail bar, but a little support. Oil up a little bit. Pattern still in development mode down here on the retest. Silver continues to be weak. With interest rates going up, this is like, how did the markets ignore this? I mean, day before yesterday. Geez. I mean, they could. Everybody knows by now that, of course, they're going to raise interest rates, but they got to raise half a point, and maybe they're going to do it before the meeting, and just you're going to get people that aren't aware or looking at the type of stuff that we're looking at. And I mean, we covered this stuff, pre-market, all the bad stuff that was happening, and to ignore it is foolish. But hey, a lot of people don't know what to look at. Look at the 5-year moving up, 10-year. And the only thing that's kind of saving, I don't even know that how much of it's silver lining, going, you have to go further out, is the fact that, the very short term versus the very long term is that the long term is moving up at a pretty decent rate. And that's the only thing that's saving the day partially from, an all out bear market. Whereas, these others have been inverted for a while. And we've been talking about this for a month about, what's coming down the pike. And, here it is. And one of the things I mentioned in the green room yesterday was like, what, as long as, I've been doing this about 30 years, give or take, right? And it's like all these institutions, they got, I don't know, who knows how many people on the payroll looking at similar things that I'm looking at, and probably maybe more, who knows? But it's like they all buying like this is going to the moon on this day. So institutions have started to trade like day traders in a sense, and they'll flip on a dime. And that's exactly what happened. But, this is like buying frenzy. And it's like, oh my God, what's happening today? Yesterday was like it's going to the moon. So, pretty crazy. And, now it's going down. I agree, George. Day traders are the best. But when you've got an institution with millions, if not billions of dollars trying to shift things around, you get some wild moves from day to day. And so markets are always evolving. And, be nimble, Jack, be nimble, Jack, be quick. Gold just stabilizing here. This was like, we talked about this, like, who the hell could ignore this, and think like something bad isn't coming. So, we just look at it like, here's these bullish patterns. Keep an eye on the exit door because somebody's going to yell fire. It's just a matter of when, today, tomorrow, the next day, it's coming. This is all bearish, and leads more to recession type of thinking. That's coming, historical information. And, VIX now starting to move up. So bearish stuff going on. We anticipated it. We don't know the day or the moment. Here it is. We'll see how far it goes, and then we will reevaluate as we do, day to day, week to week, and see where things are going. To you, Dan.
Good morning. Yep, into the close yesterday. We said we had a full bearish bias. We started picking up a lot of shorts on the afternoon breakdown. This was one of them right here. AEHR. All right, so yeah, we opened a bunch of shorts yesterday. Redfin, a couple of housing stocks. Interest rates going higher. Housing should still be under pressure here. Raoul Disney short. Yeah, sure. That's there's shorts galore everywhere. And as Greg said, we nailed this. I was looking for a 2 to 3 day bounce and an M top, but as Greg said, buy setup failed, measured move. Looks like that's in the cards. And the newspaper today said yesterday's bearishness was because of increasing hawkishness of some more Fed speak. And on the news, I was watching a former St. Louis Fed governor, and even he's crashing the Fed. He's like, they're so way behind the curve that they got a mess on their hands, and he thinks recession is guaranteed either next year or depending on how fast they hike this year, because inflation's out of control, and raising rates is going to slow the economy. That's how it all works. All right, John, coin exit. John's asking about coin. Yeah, we exited our coin yesterday. This was another failed buy setup. We sold a put spread, stop under that green bar. There was no need to even give it more, because if that green bar got failed, it's exactly what we were afraid of. You know, measured move down with a sell setup weekly. So you're asking me, you're still in it. I would use it. It still definitely looks lower. So you got to put it in a 5-minute chart at a minimum, maybe 30-minute low. See if it can stabilize here. Pre-market, you got one little bottoming tail there. Maybe, you know, the markets are consolidating here, but pre-market, but at the low. So I don't know, maybe half 5-minute low, half 30-minute low, but it does look lower. Now, yesterday, at around 10:30, 11, I found a huge list of bullish 1, 2, 3s, which makes sense, because because I mean, think about this. It took out, today's Wednesday, it took out Monday's high, took it out yesterday, and then it was an inside bar, right, at one point in time. And that's why we found amazing 1, 2, 3s. And I went through them all. And if anything retraces over 50%, I just deleted it. But I still have a few that survived. Well, this one did not survive in terms of greater than 50%. But look at the gap up here. If that's real, I mean, that's a big bullish gap. We'll come back to it. But I had another one here, Tillis. Look, I mean, I see one print down here, but again, I don't know if that's real. But look at that daily pattern. That is a textbook 1, 2, 3 from consolidation. We had a big talk about this as we were scanning yesterday of what does consolidation mean? Well, this one's a no-brainer, consolidation. But you can also have them from continuation patterns. Upper third, inside bar, it's red. If we open flat and take out yesterday's high, I don't care about the market being bearish. That's beautiful. Raul LNTH. LNTH. Yeah. I'll put it on the long list, because then that would be, not only is it relative strength, but it's bullish daily, weekly. Then it would be topping tails ignored if it takes out the highs. Actually, oh, we're already in that. That's one of our open positions. That was in my big video over the weekend of all the bullish breakouts. So we actually entered on Monday, stop under the green bar. So we're still in that thing. Yes, Loic, it was posted yesterday afternoon under the low. Now it's gapping under the entry. You got a price void. So definitely let's keep an eye on shorting a little bounce, since it's gapping under the entry or 5-minute low, but definitely. Charlie Lima, nice, yeah, that's, yeah, it's an inverse bottoming pattern, inverse head and shoulders. Yeah, that's strong. Let me continue here. Asian, oh, this was also a short that I posted under the low yesterday, so it's gapping under, so 5-minute low is a go there. SGH, must be earnings. Yeah, that's getting cooked, so I definitely don't want to short it. And those truckers, I'm still watching. I got 2 truckers here that I'm watching, KNX and JBHT. You know, they're just wait for the reversal. You know, Twitter. It's funny, some guy on TV, and also some guy on TV calls Musk the you know, the social media agitator in chief. That's what he is. He's an agitator. So we were talking about yesterday, shorting the $60 calls on this, just because, these two gap bars are on volume. It's just showing a short-term exhaustion once you get a reversal. So that's still a call spread watch for me. 9, I think, had earnings. Not a great pattern. Lester had earnings. This is another trucker. I like that. That's a bear 1, 2, 3. I'm gonna put that in a window. Lester. Set an alarm on Artillis at 1060. Now, when the wide range bar is really big like this, far from the 20, we say, I don't like short and far from the 20. Because it's too far from support. But now I have 2 more bars that's saying it can't bounce. So now it's acceptable to me. It's what we call a bear 1, 2, 3, 4. So that I like. No, John, I did not talk about save. We did, we stopped out yesterday on the stupid news of JetBlue buying it. And I did speak to Gustavo, a pilot for JetBlue. And he said, nah, that news came out of nowhere. Nobody knew it. And, they disagree with it, of course. They don't like the airline either. But in terms of if you're still in it short, we said yesterday, let's just, I don't know if relax is the right term, but we said, let's not do anything in a panic mode. It's just a buyout offer. It doesn't mean it's going through. It still needs SEC, so on and so forth. So you are getting a pullback here. That's a nice bearish gap. Hopefully it'll take out a 30-minute low. Greg, our CCS low alarm, that looks fantastic still. We covered a third into the close yesterday. Look at knock, bottom right, left over from yesterday. 30-minute high, that looks fantastic. Continue here. Array. Oh, look at that gap over a red bar. And by the way, today's MT Live is on wide range bars. So here's a gap reversal igniting. Here's a shock gap gapping over this ugly red bar. That looks great. So I need more thumbnails here. ARRY. I'll watch it over there. Greg, this has been to it. See, I mean, that's why when the broader markets are falling, I just go into tightening the hatches mode. So that's an ugly reversal of this big green bar play. I think that had earnings. Gall earnings, but short-term top. JetBlue still weak. Jets. Pool. All right, Pool. Oh, I had an